Welcome back, traders. If you are a trader looking to master technical analysis, you need to understand triangle chart patterns, one of the price action for predicting price movements in the stock, Forex, and crypto markets. So there are three types of triangle: ascending triangle, descending triangle, symmetrical triangle. Don't forget to hit the subscribe button and turn on notifications to know exactly when we release new videos. First, what is triangle pattern? A triangle pattern is a technical analysis pattern that forms when price moves within two converging trend lines, creating a triangle shape. These patterns suggest a period of consolidation before a potential breakout, where price continues moving in a specific direction. Starting with ascending channel. First, you have a moving uptrend. Same high allow you to place resistance level. A resistance level provide a clear visual representation of the resistance level, making it easier to identify potential price movement. Higher low, allowing you to place a trend line. By connecting the lows, we can see that the market respect at the trend line. This give you ascending triangle. Price breaks below the ascending trend line. It can be a strong indication from uptrend to the downtrend. The break below the trend line suggests that the uptrend has end, and a new downtrend is start. If the price breaks above the ascending triangle, it can be a strong indication of a continuation to the uptrend. The break above the ascending triangle suggests that the uptrend has resumed, and the price will continue to rise. Another example in the opposite direction. Ascending channel during a downtrend. First, you identify a downtrend. Same high allow you to place resistance level, a multiple highs at the same level. There are concentration of the sellers at this level. Higher low allowing you to place a trend line. This trend line can serve as a support level. This give you ascending triangle. Price breaks below the ascending trend line. It can be a strong indication from uptrend to the downtrend. The break below the trend line suggests that the uptrend has end, and a new downtrend is start. If the price breaks above the ascending triangle, it can be a strong indication that the downtrend is end and the new uptrend is start. The break above the ascending triangle suggests that the uptrend has start, and the price may start to rise. Moving to descending triangle. Descending triangle during an uptrend. First, you identify a moving uptrend. Same high allow you to place support level. When you see a same high on a chart, it can be used to draw a support level. Higher low allow you to place a trend line. This give you a descending triangle. The price breaks above the descending triangle. When the price breaks above a descending triangle, it can be a strong indication of a uptrend. A descending triangle is typically a bearish pattern, but when the price breaks above the upper trend line, it's a sign that the bearish momentum has been overcome, and a new uptrend is emerging. If the price breaks below the descending triangle, it can be a strong indication to the downtrend. A break below the lower trend line confirms the downward momentum, increasing the likelihood of further price declines. Another example, descending triangle during a downtrend. First, you identify a moving downtrend. Higher low allow you to place a trend line. Same low allow you to place support level. This give you a descending triangle. The price breaks below the ascending trend line, it can be a strong indication of a downtrend. If the price breaks above a descending triangle, it can be a strong indication of a reversal to the uptrend. The descending triangle is a bearish pattern, but a break above the upper trend line suggests that the bearish momentum has been overcome, and a new uptrend is emerging. Moving to another example. The symmetrical triangle. First, you identify a downtrend. Higher low allow you to place trend line. Lower high allow you to place trend line. This give you a symmetrical triangle. The price breaks below the symmetrical triangle. A symmetrical triangle is a neutral pattern, but a break below the lower trend line suggests that the bears have gained control, and a downtrend is continue. This break can be a strong indication of a downtrend because the price has failed to break above the upper trend line, indicating a lack of bullish momentum. The break below the lower trend line confirms the bearish momentum, increasing the likelihood of further price declines. If the price breaks above a symmetrical triangle, it can be a strong indication of an uptrend. A break above the upper trend line suggests that the bulls have gained control, and the buying pressure has overcome the selling pressure. The price is likely to continue moving higher, as the break above the triangle is a sign of increasing momentum. This break can be a strong indication of an uptrend because the price has finally broken above the trend line, indicating a potential change in trend. So let me show you another example of symmetrical triangle during uptrend. Symmetrical triangle during uptrend. Higher low allow you to place trend line. Lower high allow you to place trend line. This give you a symmetrical triangle. When the price breaks above a symmetrical triangle, it can be a strong indication of continue to the uptrend. If the price breaks below a symmetrical triangle, it is a strong indication of a changing trade from uptrend to the downtrend. Moving to the strategies, a breakout and retest. A retest occurs when the price returns to a previous broken level, support or resistance, testing whether it will hold or break again. This can be a sign that the market is confirming the breakout or that the trend is still intact. Before we continue, don't forget to hit the subscribe button to show us support. We appreciate it and it will help us to bring more free content to you. So let's start with strategies number 1, a breakout followed by a retest. Ascending triangle. When the market breaks below the ascending triangle and then comes back to retest the broken support level, the price breaks down through the lower trend line of the ascending triangle, which is typically a bearish signal. Retest the broken level. After breaking down, continuation or reversal. If the price fails to reclaim the level, it confirms the breakout and may continue lower. Strategies number 2. Symmetrical triangle. The price breaks down through the lower trend line of the symmetrical triangle, which is typically a bearish signal. Market come back and retest the above trend line and support level. Retest the broken level. After breaking down, the price comes back up to retest the previous support level. If the price fails to reclaim the level, it confirms the breakout and may continue lower. Thanks for watching. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Join our amazing community by subscribing.